Hello, everyone. Today on the final bar, my guest is Llanes from Wealthnet Investments. We're going to talk about a market a bit in give back mode here, but overall hanging in there okay. The S&P just below 4,200, continuing to distribute through the course of the day. We're also going to answer some of your questions from the final bar mailbag. We've got a number of different topics to hit on. Ladies and gentlemen, this is the final bar. Hello, everyone. Welcome to today's edition of the Final Bar. I'm your host, Dave Keller, Chief Market Strategist here at StockCharts.com for this week only in sunny Naples, Florida. Thanks for joining us every weekday after the close as we break down these markets using the tools of the technical analyst, focusing on price, breadth, sentiment, trend, momentum, all the tools we can bring to bear to try to understand investor psychology and decision-making. We've talked about some of the overall tailwinds to market performance, talk about yields coming down, talk about the growth trade being able to reemerge because of rates coming off a bit. We've also talked about many of the headwinds to further upside. And the biggest headwind, I would say, to the market going higher is the market going lower, right? The best evidence we can see for overall market trend is by looking at the charts themselves. It's interesting. I was writing an article earlier today for my blog on StockCharts called The Mindful Investor, focused on three particular charts. Apple, we looked at Facebook, and with each of those charts, what we talked about were sort of the lines in the sand that clearly defined support levels and where you want to focus. And overall, a chart like Facebook is doing pretty well. The chart of Apple has not broken down yet. And whether those charts can hold key support levels or not is really, I think, the play here. That's what we should be looking for. Now, we have some great guests on this show. I'm excited to talk to Llanes here in a little bit today, looking at some of the stocks that have bubbled up in his process of looking at a lot of different names during the course of the day and the week. Next week, we have, later this week, actually on Thursday, the 27th, we have Jeff Huge from JWH Investments. Elsewhere this week, we have some really good content on StockCharts TV I want to tell you about. Also on Thursday, the 27th, our latest episode of The Pitch. That is our stock picking showdown, regular show. We do it about once a month. We bring in some different experts sharing some of the charts that are coming up as they analyze their own markets. We have Aaron Swenlin from Decision Point this month, also Danielle Shea from Simpler Trading, and Mary Ellen McGonigal from the MEM Edge. I was just talking with Mary Ellen earlier today, and I'm super excited to have her and the others on the pitch coming up this Thursday. Also, all this week, if you go to StockCharts.com/ChartSchoolTV, you will see the new series we have called Chart School. This week is all about idea generation. We have 5 different experts sharing with you the scans that they use to look for ideas in the equity and ETF space. So go to StockCharts.com/ChartSchoolTV. You'll see the schedule for this week and be able to access all the great content from those 5 experts. Let's continue on with our market recap. So overall, the S&P a bit in distribution mode, but it wasn't much of a down day. The S&P ended up being down, just below 4,200, trading down 0.2%. I didn't have a chance to look at breadth before we started, so we can quickly look at the advancers decliners. Yes, there's about 2 to 3 decliners versus advancers. So while the S&P was down just a bit, it was a little more on the distributive side. Again, 2 stocks out of 3, closing down on the day. So that's not horrible. That's a pretty decent day. But again, the S&P moving lower, mid caps and small caps, even more so to the downside. If there's a message there, I would say it's the weakness in small caps. And if you look at the chart of the S&P 600 index, you can see we opened higher through the course of the day, though rolling lower and lower, really accelerating down into the close. That's sort of a negative thing there. Interestingly enough, the NASDAQ 100, by the way, closing up a little bit. That was one of the few indexes that sold off, gapped higher, sold off, but then spent the rest of the day sort of hanging in there okay. The number 1 sector, by the way, was consumer discretionary. Number 3 was technology, which have pretty good overweights in the NASDAQ 100. Looking very quickly at some other asset classes, interest rates continue to go lower, and that's a pretty fairly sizable move down. The 10-year yielding down around 156 now. which is coming off of much higher levels. The TLT, bond price proxy that we use, is up about 1%. The dollar index essentially flat. Commodities mixed, although precious metals were up, and the chart of the GLD continues to impress, moving higher to the upside. Silver up as well. Cryptocurrencies all in the red today for the most part, with Bitcoin down about 3.5% from 24 hours ago. Let's look quickly at a chart of the S&P 500. We'll come back and check in on sectors and some of the group themes that we should pay attention to. So the chart of the S&P hasn't changed much in the last trading day. Again, this is a bit of a down day after a bit of an up day yesterday, but overall, it's still within a general range-bound scenario that we've been in for the last month or so. If you look, the S&P is about where it was a month ago, and again, we made a new high since then. We made a new swing low since then, and then we settled right back down mid-range. The RSI is sort of in the 50s, which is about medium range for that indicator. Overall, telling you fairly even momentum on up days and down days, sort of sideways, sort of a consolidating phase. And to be honest with you, that's, I would argue, sort of what the market looks like or feels like. You have charts like Apple that I've argued, PayPal and others that I think are good charts to watch here to see which way they resolve. This sort of market either breaks out of this range to the upside when you see buyers take control, anecdotally, buyers taking control and more demand than supply and prices move higher. On the other side, you could see a market like this breaking down. And what's good about this trend and what's good about the charts of Apple and PayPal, as I mentioned, and even things like Facebook that are breaking out, is you have really clearly defined support levels. On the chart of the S&P, you've got now 4,100, which is the 50-day moving average, also trend line support from some of these recent lows from last October, from last March, from earlier this year, and then also lines up with some of the lows we made earlier this month. And I think if the market does pull off from there, that 4,100 level would be a clearly defined level of risk. Below that, you have 40.50, which would be the swing lows from early May. And again, if those levels hold, this is still overall by definition an uptrend. If those levels break, you have to start questioning the uptrend. So overall, you've certainly seen a reemergence of some of these growth areas of the market. And again, I like the fact that it's fairly, this is never easy, but I think sometimes you struggle to find sort of a line in the sand, like a level at which you have to understand that the market dynamics are changing. I don't think we have that scenario right now. I think for most charts out there, you have really clearly defined levels that you want to pay attention to. And until you break those, overall, the trend is remaining fairly strong. Looking elsewhere here at some of the other markets of interest, the number one sector, sort of jumbling around here as we process the closing ticks of the day, but real estate and consumer discretionary, the top two sectors, those are each up about 1/3%. After that, sort of flat. You had a couple sectors flat: tech, consumer staples, and communication services. And then you had the ones that were more distributive: energy leading the way lower, down 2%, utilities down 1.2%, and financials down 1%. So these are a couple of the cyclical sectors that we've talked about, materials, industrials as well. Some fairly strong charts that are sort of giving back some of those recent gains. Utilities also on the downside, which is a fairly defensive sector. So it's a bit of a rotational sort of a move. No huge gains or losses all around. It wasn't a climactically good or bad day anywhere, but sort of a resettling into this trend. One of the questions, by the way, we have coming up, and I don't want to steal the thunder from the mailbag segment, is Nucor, NUE, which remains the second highest ranking in our scooter rankings. Looking particularly at the large cap universe, is where we have a system, a model that ranks very systematically, looks at all the members of the large cap space and ranks them on a percentile basis from strongest to weakness, and has a couple different periods, but it's geared more toward the longer term trend. And you can see the stocks that are represented here. Still, even with some of the give back in the last week or so, a lot of energy, some material stocks, and so forth in the top 10. But then you also have something like Applied Materials, which is a semiconductor name. So it's sort of an interesting mixed bag of things. Quickly looking at semiconductors, that's a space that is tempting. It's interesting to see a group like this that has pulled back. And I know here, when looking the first week or two in May, you saw the pullback in Applied Materials, AMAC going below its 50-day moving average. And right around here, if you take a snapshot there, feels very distributed. This is when the RSI is getting below 40. This is when the relative strength is starting to turn lower, and it's potentially a new 1 month, or it is a 1 month relative low, potentially more so. Stock breaking its 50-day, all of a sudden it feels very distributed, but look at how these things have turned very quickly. And now, again, while it's not the best chart that I've seen, I've seen other charts that I think are more constructive than this one. Something like Facebook that's breaking out of a base as opposed to reapproaching resistance, I would argue maybe in a better configuration, but overall this has gone from looking pretty ugly to looking not too bad actually, and now threatening resistance on the other side. I think breaking above 140 for Applied Materials would be really interesting. On that rise to 140 there, you had an RSI around 60. It's about where we're at now. Seeing the RSI get above 60 as you push higher is always a nice indication that tells you that instead of being in more of a bearish range, it's more in a bullish range for the RSI. So I think that's an important trigger to look for there. I was looking at the ARK Innovation Fund earlier, ARKK, and I think there are a lot of eyeballs on this chart. And again, what overall I struggle with thinking of the ARK Innovation Fund on the bullish side is the fact that you're still below a trend line taking the recent swing highs. If you take the February high and the April high, we're remaining below trend line resistance. We're remaining below the 50 and 200-day moving averages. We're also now testing this breakdown level from below. This is the March lows here, around 110 or so. And now we're testing that level from below. So overall, it's actually setting up to be the inverse of the Facebook chart where you break out and then test that level from above. Here, we're actually breaking down through the support and now testing that level from below. The RSI remains in a bearish range. So overall, I still see this as more negative than positive. It certainly feels like this is in a downtrend until proven otherwise. And until you see a break above some of those key levels and a higher low, which would be most telling, I think this is more distributive. We need to take a quick commercial break. We'll be back with my guest, Louis Llanes. We'll see you in a minute. Hello, everyone. Welcome back to the Final Bar. This is Dave Keller here at StockCharts.com. So good to have you join us every weekday after the close as we break down the market activity together. As a reminder, we're going to do another mailbag segment a little later in today's show. We would love to hear from you and answer one of your questions in our next mailbag segment on Friday's show. Shoot us an email with any questions that are coming up as you analyze your own charts and see if we can help point you in the right direction. Our email is thefinalbar@stockcharts.com. We are on Twitter at finalbarsctv. Finally, on our YouTube channel, just put a comment below the video that you're watching. We would love to hear your questions and your feedback and hope to answer your question in our next mailbag segment. Also, as a reminder, go to stockchartstv.com, use your email, set up a free account, and you can access all of our great content immediately. We're also on all the app stores, so you can watch us on all your mobile devices, Apple TV, Roku, wherever you're looking, we are most likely there. Also, just search for StockCharts TV on demand. I want to welcome on my guest to the show, Louis Llanes. Louis is the founder of Wealthnet Investments, coming to us from Colorado. Louis, great to have you back on the show today.
It's great to be back.
So listen, we were talking before the show started just about the overall market environment. I have a chart of the S&P up here just to start. Talk us through what are you seeing overall? We've talked about the rotational environment. That's how I've tended to describe it. How would you describe what we've been seeing recently?
Oh, I totally agree about the rotational environment. From our perspective, really what's been happening is we've had a big gap in the past that has been closed. The gap was basically the gap between the high growth stocks with high revenue that were benefiting in a slow growth environment, and then the recovery stocks, the value stocks. And that gap, that relative valuation gap, has closed finally. So we've been able to take advantage of that gap. So now I think you are again in this rotational situation where even some of the more recent leaders, like the energies and financials, which we were lucky enough to participate in, those are taking a pause now. You're seeing a lot more divergences in the market, and that's really leading us to have a little bit different rhythm in the market. And I think that's really the key takeaway that we're getting from this environment, is to change our rhythm up a little bit in terms of how we execute.
That's a great take. Now, you brought a couple tickers with you to talk through with us. The first one's Nexstar, NXST. Talk us through this one.
Yeah, this is the kind of thing that we're looking for. If you look at most of the stocks throughout the market, many of them are either extended and are going into a chop mode, or they're in a downtrend. But there are some, and there's not many, but there are some stocks that are basing nicely, that have great fundamentals, good quality, good valuation, that are starting to show signs of life. And this would be one of those stocks. So what I like about, you've heard that concept of a volatility contraction pattern or a base pattern. That is one of the most effective ways to make money when you have this kind of environment, where you're trying to find those companies where supply and demand has been relatively stable, moving back and forth, and then you're seeing evidence that the downside volume is dissipated. So like in this chart here, what you'll notice is that you have volume is kind of declining as you're going through this pattern here, and then you start seeing higher volume. I have a little arrow there showing higher volume as buyers and sellers kind of get more, buyers step in more aggressively. And then you start seeing the volume come down, and it's slowly moving its way up. So we can get into a lot of quantitative stuff here, but there is a lot of evidence that buying on lower volume is actually better in many market environments like we have today. And that's kind of what we're looking for. We're not trying to find the obvious. We're trying to pick them up when they're quite less obvious, and then be on before you have the volatility expansion.
It's a great example, Louis, and I love that. I mean, it's a great clear rotation, sort of that coil pattern, that narrowing of the range, and then breaking out to the upside. Chart number 2, my kids would be thrilled to hear you talking Roblox. Talk us through this one with a nice breakout as well.
Yeah, we took a position in Roblox 3 days ago, 3 market days ago, and it was quiet. The point I wanted to make here is that the stock was quiet when we took the position, and it wasn't an obvious breakout. And that's the kind of thing that you want to do right now. We're more in a mean reverting type situation, where you've kind of identified the what that you're looking for. At least this is how we're approaching it. And we're taking the position and easing our way in as we're getting closer to key levels, that magnet effect where obvious support and resistance is there. And then when you have that follow through in the middle of the day, that's when you can get add more on. That's kind of how we're tactically dealing with this. So as it followed through, we added more, and then we had a very strong follow through. By the way, most stocks are not following through like Roblox just did, but you could see also the volume got really quiet, and then all of a sudden you see on the right side of that base, volume starts increasing, and that's the kind of thing that we're looking for of the stocks that we like fundamentally. If they start behaving like that, then we know we could either get more aggressive with it, and try to build our positions a little bit faster. And we have been selling stocks, and we've been rotating out of the growthy names for quite a while now, and entered into the small caps and the financial and the energies, as we talked in the last meetings or last discussions we've had. And now, we're kind of that value gap to us has kind of been closed.
Very interesting. And one of my favorite quotes is the goal with investing is to have people agree with you later. And I love that idea of getting in when something is, before something's really emerging, and hopefully participate on the upswing. We just have time for one more chart here, Louis, but you brought Snowflake, which we've had questions on before. What's your take on this chart?
So my take on this chart is that we've got earnings coming right up, and the stock is trying to, we had a big hammer pattern. This is a weekly chart. So a weekly hammer pattern is typically bullish from a downtrend. And the stock tried to move higher on it. And then today, this does not have today's market action in it, but today it stalled out, as the market stalled out. But I think if this stock starts acting well and breaks out of that tight little range that I outlined there, then I think that this stock could go higher. But it's really related. It's a more speculative issue. This is the kind of stock that I think is a bellwether to look at to see how speculative market participants are going to be. And I think this stock will probably lead, if you see the Facebooks, et cetera, continue leading. This type of company could even do better than those other companies if we get more speculative. That is, if we move more in that direction.
You're certainly starting to see some improvement in the relative strength there on Snowflake for sure. Louis, this is so fun. It's great to have you on. Thanks for talking through 3 really good examples and for your broad take on the markets. Stay safe, be well. We'll talk to you again soon, all right?
Sounds great. Thank you.
That's Louis Llanes. Louis is the founder of Wealthnet Investments, and again, I've heard Louis present a number of times, and I love how he thinks about it. He hinted at quantitative methods, and I would tell you just from knowing him and his work that the comments that he's making when he's talking about the charts, so there's a lot of quantitative rigor that goes behind some of the names that he's sharing with us. But I love that idea of of focusing on names where they're getting a little quiet. There's a narrowing of the range or a lowering of volatility, and that's something John Bollinger has spoken of many times. That narrowing of the band, sort of that lowering volatility before sort of the emergence of a new trend. And I think with some of those stocks, Louis is potentially focusing on that particular phenomenon. Great take there overall. Let's continue on. Our next segment is the Final Bar Mailbag. We love to hear from you, as I mentioned. And in the future, if you have questions that come up, shoot us an email with any questions that you have. We'll do another mailbag segment on Friday's show. We would love to answer your question on the air. Our email is thefinalbar@stockcharts.com. Let us know what is coming up in your own work. For now, let's answer some of your recent questions. Next question, just finished watching the Final Bar. Could you please share your opinion about NUE, Nucor, for the next show? Thank you. And this is a stock we've talked about because at times it's been one of the top ranked scooter stocks. And the scooter, again, it's the StockCharts technical ranking. Currently, it's second out of a big list of hundreds and hundreds of large cap stocks. This is number 2 out of that entire universe. So still a pretty decent chart. Here's what's interesting about this chart. You can notice today down about 3.2%. This is the S&P was down just a little bit, 1/3%. So, certainly underperforming today. The materials sector, as Louis and I were just talking about, some of these cyclical sectors have had really good runs, but they've had really good runs, right? And the question is, do they need to give back some of those recent gains before potentially continuing their leadership role? He would argue that's sort of the case. And I think the chart for Nucor overall, the check in the plus column is the fact that it's in an established uptrend, right? If you look over the last 6 to 12 months, it's had a consistent pattern of higher highs and higher lows. Even the give back in June of last year kind of continued the upside. And besides the, sort of late January pullback where it undercut the December low, since then, it's just been this nice consistent pattern of higher highs and higher lows. Notice how the RSI has never even gotten below 50 during that period. Now, all of a sudden, you have a couple concerning signals, especially in the short term. You have this bearish divergence of higher highs in price, lower peaks in RSI. You have not really made a lower high yet, although arguably this week, potentially, we're making a lower high, sort of undercutting the high from mid-May. The thing for me on any chart like this is, do you break any key support levels? Things I would look back at are left on the chart. On this chart, 95 is that swing low from May. That was before that last big push higher. We've pulled back again and hit a bottom just before, just above 95. And I think that's the line in the sand I would be watching. As long as we remain above that, this trend overall is in pretty good shape. We break below 95, I think all of a sudden you have to question the viability of the current trend and see if there's a bit more of a give back that needs to happen. If we do break 95, 85 is that next really logical support level that actually lines up fairly well. Maybe a little below that would be the high from late March, but overall remaining above that range would be really important. We start to break that, and at that point, I would be looking down at the RSI to see if we're going to hold support, around RSI 40 or 50. That's where things tend to bottom out in a bullish phase, especially the 40 level. That all plays out, and it's an actionable pullback within a decent uptrend. We start to break those levels. I think you have to be concerned more about the viability of the long-term uptrend. So overall, trend's still very much in good shape, and the fact that it's one of the top-ranked stocks tells me not to be too worried about the long-term trend. Chart number 2, one of the most obscure and difficult topics to understand is Elliott Waves. And you asked that as a question, so I guess you're not declaring that, but more asking that. Do you agree or disagree? And it's also one of the simplest to understand theoretically. I think you hit on a really good point. Elliott Wave, as you probably know if you've watched the show for a while, we don't talk about it on the show very often, only because for me, I've learned about it, I've studied about it, and if you've taken the CMT exams, you have to learn a good amount about them just to be able to think through them and talk about them. But overall, it's not something that's core to my process. I found for me the mechanical parts of Elliott Wave, sort of the parts talking about particular wave counts and measurements, I did not find that to be particularly helpful for my own investment process. Although I will tell you, I have learned a great deal from talking with people like Bob Prechter and others that use Elliott Wave regularly in their process. And of course, my mind's totally blanking on others that I would suggest to you besides Bob, but others at Elliott Wave International. We've certainly enjoyed talking about how they relate Elliott Wave counts, and so I enjoy thinking about that. However, I would say what you mentioned was it's simpler to understand theoretically, and I think that's absolutely the case. There's a behavioral aspect to Elliott Wave, and Bob Prechter's book, Frost's book on Elliott Wave were certainly helpful. For me, Steve Poser's book talking about Elliott Wave, I think it was like how to apply Elliott Wave properly or something profitably or something along those lines, really helped to describe the behavioral implications of each of the wave counts. There's a reason why wave 1 has a certain characteristic and wave 2 and the big wave 3 as participants start to believe in a trend. I thought the behavioral implications of Elliott Wave are fantastic, and you'll pick up on those implications. Even though I don't specifically call it Elliott Wave, it certainly informed a lot of what I talk about. Third question was someone sent me this tweet and asked me to comment on it. This is from Mark Ungewitter, who's been a guest on the show before, is a successful money manager and uses StockCharts like a power user. So I'm always happy to highlight him and his work. He mentioned this particular trend, which is looking, basically saying is the modern, ARK Innovation Fund taking over the Qs and suggesting an analog looking at the NASDAQ, or the growth area in the March 2000 high versus the ARK Innovation Fund. So where I do agree is the fact that is the ARK Innovation Fund a great reflection of sort of the new economy? Absolutely. And I think what the Qs used to represent and what the ARK Innovation Fund does now is sort of this speculative new technology, sort of the next generation of what we will most likely be using as a core to what we do everywhere in futures. I think that's absolutely brilliant. I'm not a huge fan of taking one analog and comparing right now to the Qs from 2000 and assuming that there's any statistical significance in following this exact trend. However, I think it's fascinating and absolutely applicable to look at how growth stocks traded around the 2000 high. Look at what the sell-offs were, look at what the rallies looked like, and think about how right now compares to a period 20, 21 years ago. In that case, I think it's absolutely appropriate and helpful. A lot of times in my previous life on the institutional buy side, we would look at historical analogs and just think about what were the interest rate environments like? What was the interest rate environment like? What were inflationary concerns like? What was the Fed doing? What were precious metals doing? Looking at different sectors and themes during these historical periods. And I would encourage you to look back at some of that period. I mentioned the book by, I think the last name was Mahar, M-A-H-A-R, called Bull. And I would encourage you to read that about the late 90s if you've not done so in a while. It was very interesting. We need to wrap the show, go to the 3 and 3 charts in 3 minutes. Here we go. Chart number 1 is the ratio of high yield debt, HYG, versus the treasury market, the TLT. I was talking with Mish Schneider and her husband, Keith Schneider. Mish hosts Mish's Market Minute here on StockCharts TV. She does a fantastic job analyzing the markets in real time. And this was one of the ratios we were talking about today. Keith actually mentioned how high yield was rolling over versus bonds, and that's absolutely right. This is a general risk on versus risk off in the fixed income markets. Are people looking at the high yield side or the treasury side? The fact that this ratio is rolling down actually has negative implications for stocks, suggesting that bond investors are going more toward the risk off scenario. And so that was interesting to see that roll over. It hasn't really broken down yet, but it's certainly a ratio to pay attention to. Chart number 2 is looking at the TLT, the bond ETF. Bonds were up today. Interest rates were down. We've talked about the 140 level on the TLT. We've talked about the RSI 60 level. Both of those very close to becoming in place. So I think as this week goes on, it'll be very interesting to see if we break above that 140 level on the TLT, break above RSI 60. That would indicate potentially a flight to safety, right? Which is what the ratio that we looked at first may be implying. Finally, the third chart is the ARK Innovation Fund, ARKK. This is, again, I think the new economy, the fact that this is still in a downtrend, having broken down and now testing the 200-day from below. Very compelling, folks. That's our show. Special thank you to Louis Llanes joining us from Colorado today. For StockCharts.com in Redmond, Washington, I'm Dave Keller. Be safe. Have a good night.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.